Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our quick first video of the year 2019. We're going to be kicking it off looking at year to date for 2018 as far as what stocks here within the S&P 500 did positive, did negative. Then we're going to take a look at stock futures and go into M1 Finance, making our first deposit towards 2019's Roth IRA. So if you are brand new to the channel, hit that subscribe button below. If you have any comments, questions, going over the video, stock market, personal finance, let me know in the comment section below. And of course, if you do enjoy the video, find it helpful, hit that thumbs up button, and let's go ahead and get into it. So just taking a look here at the S&P 500 as a whole year to date, this is for 2018, we can see that we had a few stocks within most of the sectors out there, being 50-50 within, positive here within Amazon, but also Walmart. What was this? DLTR, Dollar Tree down 15.83%, and a few others there. Now, some of the sectors that did not come out of it very good were financials. So all the financials there were basically slaughtered. JP Morgan doing one of the better ones, whereas you can see here that Wells Fargo and Citibank were down over 24% there. So harsh in the financials. Also, oil sold off hard after August, losing, I believe they went down from up positive 25% to going down over 25%. So very big slides here within the oil and gas group. Now, industrial goods there, Triple M, Han also down, Honeywell, General Electric losing over 56% there, down 56.62%. That is a huge loss. I know a lot of investors are recommending GE at the very beginning of the year, so hopefully investors were able to jump out of that before they were losing too much. T-Row there, that was one I just covered here in my January stocks to buy, though that I'm taking a look at buying, not that I recommend other investors buy. Pepsi was down 7.87, whereas Coca-Cola was up 3.2%. So this is a quick S&P 500 there. Now, on the very last day of the year, we ended in a very positive note. I believe the last 4 days of 2018, from after Christmas, we had a very high note. So day after day after day after Christmas, we were positive. The Wednesday directly after Christmas, we had jumped up within the stock market over 5%. So as of that date, I don't believe we had any red days since then. So Wednesday here in the 2nd of January, I'm already looking at stock futures currently. Everything is down a little here. S&P 500 futures are looking down 0.9, NASDAQ down 0.99, Dow Jones down 0.82. So I was also kind of taking a look here. I'm also looking at the Hong Kong markets, Japan markets. Hong Kong is currently open. We can see that this is trending down negative 2.79%. So this is kind of like a little indicator. I like to look at other international world markets here, so we can see that the Hong Kong market, we can actually jump back over here and take a look at the world, and we can see here China is down. JD here in the day is being pretty negative here over in China. So what I am thinking is that Wednesday we're going to have a negative day here within the market. We've had a lot of positive days, so this is completely fine. Have some breathing room, and this is one of the reasons I am taking a look at to add to my positions and start my first deposit on Wednesday, because it is going to be a red day, giving me some of the good buying opportunities that I haven't had in the last few trading days. Now, taking a look here, investors are still cautiously optimistic about 2019, but here's what could go wrong. Now, this article covers that borrowing costs could hurt, so interest rates are starting to get, they're increasing every couple months. The Fed is continuously increasing rates. They did cut back their rate increase from 3 to 2 here in 2019. We shall see how that all plays out. But here we had several hikes. During 2018, we had 4 hikes there, starting the year at a rate of 4.5% and ending it at a rate of 5.5%. So we went over a 1% change there just within the year. President Trump getting impeached is also another factor that investors are looking towards. This could cause some, uncertainty. Does not play well in the market. Also, the trade war. There's a lot going on there with the trade war between the United States and China. We have the global growth. It's been climbing. As of 2014, 2015, we have been on a straight tear, going up into the highs of, let's see, they had their highs right up back here. So we peaked out here in 2018 on September 20th at 2,930 and 75. This is here within the S&P 500. So as of that point, we have dropped more than 18%. I believe we're somewhere in that, within the last 3 months, we've lost a little over 15, 18% from the highs. So we are still kind of trending there. Now, global growth, as I said, as interest rates start to rise, it's very hard for small, mid-cap, large-cap stocks to use debt in order to build their companies faster. So all that debt on their balance sheets, that begins to get heavier weigh against them, and they can't borrow more debt to build themselves. So they have to take a step back, hopefully consolidate themselves a little bit, and we may end up trading sideways for a while. We may end up falling back as earnings per share and revenue don't meet expectations. That could cause these stocks here to continue to fall into 2019. Technology stocks have unique challenges, Netflix, Amazon, Microsoft, Apple, Google, Facebook, whereas a few of these here, Facebook is trading below the S&P 500, one of the main FANG stocks here, trading below the S&P 500, whereas Netflix there at the top. Here, percent change from September 20th to 31st, we can see S&P 500 staying pretty positive in comparison to all the FANG stocks. So these high-end flyers that were kind of keeping the S&P 500 high for the majority of 2018, all begin to deflate right around that same point. We had talked about it in our earlier videos where the majority of the stock market was already in bear territory from March 2018 until about August, and with 60% of the stocks already trading 20% down for the year, all it took was those FANG stocks to kind of deflate, and that kind of dragged the S&P 500 back down to that normalized state. Now, that is, what the article here kind of covered. I will have this link here in the description below. I think it's a good read for all investors. Covers a lot of what is currently making the markets and the future here in 2018, uncertain, which the stock market does not like. So what we're going to be doing is we're going to go ahead and start our first deposit into 2019 here on Wednesday, the 2nd January 2019. So all we're going to be doing here, heading over to our funding tab. Now here within the funding, I don't have any sort of deposits kind of set up. We can see here that our IRA contributions for 2017, 2018 are currently maxed, and now we have this option here. We have $0 of $6,000 towards our Roth IRA for 2019. So what we're going to be doing here is there's 52 weeks here in 2019, so I'm going to take my $6,000 divided by 52. I'm going to make a one-time deposit of $115.38, and this is just going to go directly in. And here we have the option of depositing towards 2018 or 2019. Now, I've already contributed and maxed out for 2018, so I'm going to go ahead and continue selecting 2019. I'm not going to set a schedule right now. I'm going to make a one-time deposit here on Wednesday. I'm going to go ahead and hit continue. And then it's just going to ask us, okay, I want to go ahead and transfer from my USAA account on the next trading window, which is on Wednesday. And then I'm going to go ahead and confirm. So now on Wednesday, I have $115.38 being deposited here when the stock market is expected to go into the negative on Wednesday. So I'm going to be able to buy something here at a discount. It may continue to fall here on Thursday, Friday, and then end the week there. Now, from that point, I've always wanted and enjoyed setting my weekly deposits here on Monday. So we're going to go ahead and redo this here. Same amount. We're going to go ahead and set a schedule this time. This is going to repeat weekly. I do enjoy depositing every single week on Mondays for $115.38. So here, that is our whole schedule. We're going to go ahead and confirm there. Now, from this point on, we're going to go ahead and dismiss that, go back to our funding. Let's see if this actually went through here. So let's go back into our funding, and there we go. So everything is fixed. I may have just glitched out here. So we have a one-time deposit going in. This is going to go in tomorrow, and then we have our automatic weekly deposits that are going to be starting here on the 7th of January, which is next Monday. We're going to be adding $115.38 going every week forward. So as of these two deposits, we're going to have 50 additional weeks in 2019. And that is that. So that is all I really wanted to cover in today's video. If you guys have any comments, questions, going over the article, going over your opinions of the stock market here within 2019, let me know in the comment section below. I always like to read and reply and kind of see what everyone is also thinking about what the stock market's going to do. Do you believe that we are going to be trading sideways for a while? Do you think that we're going to be, falling pretty fast, pretty hard here in 2019 going into a recession period? Or do you think we'll kind of bounce back once we kind of deal with the trade war, once we, the Fed stops raising these rates, once the President Trump knows that he's not going to get impeached, or all the uncertainties out here that are in the market? What do you guys think 2019 has in store for us? So that is it for today's video. If you guys did enjoy it, again, hit that subscribe button. If you are brand new to the channel, leave me a comment. And of course, if you did enjoy the video, find it useful, hit that thumbs up and finish it there. So that is it, guys. I will see you next time. Have a great day. Bye.